All right, everything looking good. We are live. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 12/25, 2022, 8 p.m. Eastern Standard Time. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, let's get rolling. Jay Hoff in the house. What's up, brother? Merry Christmas to you, my man. Loud and clear. Appreciate that. Hopefully you had a good time with your loved ones. Enjoyed a little time with the family. And now you're ready to look at some TA. We're going to mix it up and do it a little different today. Keep it nice and casual. Have a little bit of fun. But we're still going to look at some charts. So I thought, what more appropriate charts could we possibly look at than some big toy companies? So going by market cap, we're going to take a look specifically at, we're going to look at crypto just because it's the only market that's open. And then we're going to look at Walmart, Disney, Target, Hasbro, Mattel, and Funko. Just a bunch of random toy companies. So let's go ahead and zoom out here. We got our big stream obviously coming up on Wednesday. So make sure to tune in for that one, or at least watch it later. Because that's going to be our monthly / year-end market wrap-up. And that's going to be a very important one, as we're going to be looking for essentially the end and beginning of potential trends to follow. So this is our, oh, I went to way too long. This is our Walmart chart right here on the monthly. And as we can see, I mean, this thing is as up and to the right as it gets. If you just saw it on the 12-month chart that I was on a second ago, again, as up and to the right as it gets. Now, what we have to pay attention to is after these big spikes, like we see here, we have a nice, ridiculous run to the upside, and then we go into a long consolidation period, and then a bear market. And even though we don't have a deep retrace, this thing goes sideways from 99 until we get back above here in like 2012. So we want to make sure to avoid stuff like that. We don't want dead money. Similar, though, we see obviously the histogram, a bunch of green, and then we start to top out here. We flip the slope from blue to red, and then that was the beginning of the period. And then we go through a whole nother blue slope period consolidation before we finally break out. So here we see the same thing, that blue slope flipping a red. We're losing the histogram. It's now down here at the 0 area. We had a little bounce back to the highs, but we can see exhaustion in this trend. So to me, when I look at Walmart, what I see is it's banging its head on the highs, which is good. The more times we hit our head on the highs, the more likely we are to break out to the upside as we chew through those orders. But we can see here, even this little micro correction was bearish divergence over and over again as we're putting in higher highs on price action and lower highs on the histogram, lower highs on the stochastics. We see this big spike right here, which is the knife, basically just extreme buying interest coming in all at once and then exhausting itself. And that's basically the breakout. And then the breakout fails. That's a throw over, typical throw over. Instead of walking up to the edge and then just dropping, whatever, our stone off the edge, we throw it up in the air as high as we can, squeeze out all the short stop losses, confirm the breakout, and then the stone comes back down. So all it does is just uses that momentum to break down when a normal support area is holding. So we see the moving averages, the 8 and 21 we're holding right here. It wasn't breaking to the downside, so we do a little throw over, a fake false breakout, or fake out, stop hunt, whatever you want to call it. And then we finally get the appropriate reaction. But we see that corresponds to similar what we have here, where we printed bearish divergence by putting in highs, and then we break down from it, but then we come right back up here again. So it's not crazy to think we're actually getting ready to do another throw over or another breakout to a new all-time high before we actually break down. But likely what this is telling us is probably the target is just a retest of that previous high, our previous support, and the 200 somewhere around here. So to me, when I look at this, I see Walmart potentially long-term going back down to retest like the high 80s, low 90s. But on a monthly chart, obviously this could turn back around. We broke down from here and confirmed the 821 bear cross, and then we recaptured it. So when we look at this, this looks more like the Dow Jones chart than it does any of the other indices. So when I'm looking at Dow and saying, hey, there's a good chance for new all-time highs, I look at something like Walmart and it's basically the same exact signature. The difference is, it was basically pennies away from that all-time high already. So next on to Disney. What's up, Todd? Good to see you, brother. Happy holidays. Merry Christmas to everybody. So here we have Disney next. So obviously this is a big one. We had a bunch of just crazy stuff going on here. We have the CEO stepping down and then coming back. Obviously they have taken some crazy directions recently with their wokeness and had just quite a few flops lately. But long term, it's hard to think that like Disney Plus and Disney theme parks and Disney as a brand, for merchandise and just in general is not going to do well. Obviously, we see here on the monthly chart, going back to 1968. I mean, this thing is, again, just up and to the right. Now, what we want to avoid, obviously, is these periods like 73 until roughly 85, a 12-year period where we have a deep retrace and then sideways before we finally break out. And we see, very often a double top right here again, 2000, and then we go sideways and it takes us till roughly 2011 to break out. So we see a couple times where we have a big uptrend followed by like a 10 to 12 year retracement, followed by another big uptrend, 10 to 12 year retracement. And obviously after this last big uptrend here, we're in the process of that retracement. So Disney obviously looking much weaker as the 8 and 21 is actually strengthening to the downside. So where we just saw Walmart has actually reclaimed that level and, potentially avoided a catastrophic downfall, Disney did not, and it has fallen down here to the 200s. So in many ways, we would expect to see the weaker stocks in the market fall down to the 200s or even through the 200s, like we see here on these previous times with Disney. But some of the stronger stocks like Walmart may actually never even touch the 200s, depending on how well they hold out and, depending what sector they're in. For instance, Walmart, you would think fundamentally, if we do go into a recession, probably does better than most. But also, if we don't go into a recession, probably does still pretty good. So there's a reason a lot of people flee to like the consumer staples, insurance, healthcare providers, etc. in, some of these slowing times, recessions, depressions, whatever. So just because there's uncertainty in the future as to whether or not, the economy is going to be booming or we're going to go through some bust depression, extremes, new all-time highs, or just massive downtrend, regardless of which one, there's still some things that we could pick that will at least protect our purchasing power, if not generate some, legitimate wealth and, potentially pay dividends too, depending on what we're looking at. So that is Disney right there. In my opinion right now, Disney looking very, very rough. The key here was, and this is big, the key here is basically this next close. So this is our low right here. Matter of fact, we do have some drawing tools. I guess we could bust them out. I mean, even though it's Christmas, we could still use the drawing tools. So we have basically this pretty key level of support that we have tagged multiple times. And we had an aggressive wick through it once, had an aggressive wick through it here. And let's just say, for instance, a bunch of buying pressure came in suddenly and we got picked up right here. We could have another aggressive wick down through it and still have this area hold. So we don't want to get ahead of ourselves. But that being said, we have 4 days and 20 hours until the end of the year. And that obviously the end of the month as well. So whatever happens this next week in the market is basically either Disney getting bought back up and the support holding, or Disney closing where it is or below basically 93.50 and that support having broke. So we got to be real careful with this one, because if we do break down right here, we're already at support. We've been rocking this support out forever. And now we have the 200 as support too. We have a 200 simple slightly lower as support. But the fact of the matter is, if this support, I mean, yeah, sure, maybe it holds a little longer. Maybe we get another bounce back up here. But eventually we're going to drop through this support. So it helps that we're getting some assistance now from the 200s as well. But if it gets nasty, we can look at this chart going back to, the dinosaur days, aka 1960s. And, essentially, I don't want to get too technical with this, but we see an impulse wave up and then we see an extended correction and then we see an impulse wave up and extended correction. So what if we just fib from, this most recent impulse wave up? So we'll just go from the macro bottom right here of the previous correction, which, if you're following along at home, that's 2002's low at like 13.22 adjusted for everything. This is basically the 236 right here. We lost that. Now, here's the thing that we can do too is obviously we would love for our Fibonacci to line up right where that blue line is, because it would be perfect then, because we're like, oh, okay, that makes perfect sense. It's not just some random arbitrary line in the sand at $94. It's a 236 or whatever. So let's just try and see, hey, maybe other people are actually swinging from right here. No, that doesn't really change anything. What about if they're swinging from right here? Does that change anything? Oh, okay. So actually, maybe we shouldn't be going from down here, or we can leave this one up here. That's fine. Sure, we can look at that one once it's relevant, but right now it's not even relevant. So we'll turn that one blue. We'll make this one green, and we'll pay attention to this one because this one's relevant. We know it's relevant because our line that we wanted something to line up with lines up perfectly with the 382. So it's nothing crazy perfect with the 236, but at least that way we have, all right, maybe other people are using this swing right here, not this one, which is the one I would probably use, or this one here. So it's worth paying attention to. Do we have to give it a ton of credence? Is it just people that are bad at Fibonacci's? Is it bots? Is it algos? Who cares? But it's worth paying attention to. And we know if we break down to the 0.5 from here, the 382 is right here as well. So probably if we break down lower, this is going to be our target area. So we'll pay attention to that little guy right down there. Obviously we'll look at the 200 simple at about $80, but it seems like this would be a key level. Low 70s to mid 70s. And then we can go from there as things progress. But this is very key. So whatever happens in the next couple of days, this monthly close, this yearly close, this is what it's all about. And what do the fundamentals look like that all of a sudden Disney rallies? It's like, oh, okay, Bob's back, the other Bob's gone, and now suddenly, they're going to turn things around. They're going to quit with the woke garbage. They're going to quit wasting too much money making their own content, and they're just going to hire nobodies and good writers and make people famous instead of paying for famous people. I don't know. I'm just hypothetically. Whatever it is, they're going to pivot and it's going to fix everything. They're going to get their costs back under control. They're going to get their price under control at the parks, etc. So, maybe some new licensing deals. Then maybe we get a little bounce back up here and we can start paying attention to actual bullish targets. But, fundamentally, that's just assuming this is the macro low or whatever. But, maybe that doesn't happen. Maybe it continues to sell off here, which seems likely. It doesn't necessarily pivot. Maybe it does come down to our targets right here. And then we can start looking for a bullish retracement off of the bearish dump. But for right now, the key thing to watch. I mean, we can assume this is the bottom and say, okay, if this ends up being the bottom, the 236 target is 104. But I just assume not use that at all and then say, hey, whatever happens on this monthly candle 5 days from now determines where Disney's probably going from here. Because if we close a new low, that's pretty damn bad. Not only is it a new low for the cycle, which is obviously bad, but it also takes out that key support. And that level's been holding since 2014. So when we start looking back at charts and we say, okay, if you bought any time from 2014 to 2022, you're a loser, based on stock price, you're down. That's not good. And then we have to start looking at, okay, there's not actually like a ton of support from the previous breakout from the bull market right here, which took place in 2011. There's not really a ton of support. I mean, sure, we walked up, slowly through this level right here. But I mean, what is it? That's just honestly, one or two candles overlapping at a time as this thing just slowly floats up. It's not great. There wasn't any real consolidation. It was basically just, hey, a slow trek to the upside. So if we lose this key support level, and the reason that's important right here is we have a ton of touches on this support over the last, 7-8 years. So this is a very, very strong support level. So if we lose this, not only do we lose a really, really strong support level, potentially the 200s, potentially flip the monthly 200s into a bear market, which last time that happened was pretty nasty retracement that even followed. But also we don't have a lot of support right here. So it's worth paying attention to that as we chew through, this key support line here and start falling, there's not a ton to hold us up. A couple months here, a couple months there. So for me, Disney is pretty well beat down, especially on long terms. And, I know it looks like value. Sure, it looks like value because it's at the lowest price it's been at, since 2014. So sure, it looks like it's on sale. But we got to be careful that it's not on sale for a reason, obviously. All right, so what's going on? Jhoff says, could we take a look at CBT Cabot Corp? Getting some mixed signals. Not sure if it's topped out or not. Yeah, sure, man. So next we have Target here. So let's go ahead out to the monthly on Target. See if the big guy's getting any competition from Target. Not Biden. I'm talking about the other big guy, Santa Claus. The old North Pole. So obviously this thing is just straight up and to the right. If we zoom out here to the monthly, we can see, just massive bull run since all of existence. And then, we went just absolutely parabolic. Again, we see a period where it kind of floated up right here, but essentially consolidated for long periods of time. And then once we broke out, this thing just absolutely ripped. But then we lost key support. We capitulated through it. We back tested it as resistance. 821 held bearish, not in a good way. Bunch of red histograms, red slope line in the bearish control zone. So what does it look like? Well, likely if we break down from this level, which was the previous swing low, which means we're very, very close, a couple days away from, a couple days and a couple dollars. It's about $3 off the cycle low right now. So if we take out that cycle low, we likely break down to a previous support level. We got a little something along the way. Again, we can look at where we should be swinging from. Oh, my bad. Okay, so we have, let's switch this to green. Couple of these we have actually looked at recently. So if we go from the macro low down here in 2017 to the all-time high, we came down basically to the 618. And then we also have from our previous low in 2020, the Rona low, on here as well in white. And a lot of that actually lines up as well. The 236, when we broke down, we capitulated down to the 0.5, and then we consolidated between the 382 and the 618. And then obviously that would make a lot of sense that we're getting a big amount of correlation off of the white fib, which is just basically a 1, 2, 3, 4, 5, and it's a pretty textbook 5, or pretty textbook Elliott wave. Top of the 1 is the bottom of the 4, like perfectly, which is essentially like the absolute best thing you can get. We see the 1 and the 3 are fairly similar on the chart in size, but if we actually use our measuring tool, it's $42 for the 1, and for the 3, it is $71. So nowhere near disqualifying us. So yeah, everything looks good. Looked like we were pinching into this little triangle right here, and then we actually took out that recent low, and now we're threatening this low right here. So maybe this is actually going to develop a little bit more to something like that, like a descending triangle. So we'll have a leg in, followed by a descending triangle, followed by another leg. And then we know this is a typical fake out right here, where everybody's looking at our white fib saying, oh, we hit the 618, buy the dip, and then, we'll go to new all-time highs after that. But what actually happens is we're not just correcting the wave 5 right here, which is the white fib. We're actually correcting the entire 5 waves. So now we're looking at the green fib and saying, okay, maybe that's going to be the one that's really important. And when we look at the green fib, sure, it lines up. Everything lined up with the white fib, fine. But we see the 236 in green and the 382 in white line up perfectly. We see the 382 in green and the 618 in white line up perfectly. So the chart is already telling us, hey, this might not be done correcting because we're consolidating after a leg down. So if we do break down lower, likely we're going to the next green fib, which the 0.5 would be our next target. Lines up with the 786, and it's slightly above the 200s on the monthly, which line up a little closer to the 618 and the 886. So in all reality, target to me looks like it's getting ready for another leg down to about 113. Now it can easily just continue to consolidate in this range right here and just fill it out for a while. Could definitely just go sideways for a while. But the truth is, the probability is that it will break to the downside. So 113 looks like our target on. Damn it. I'll see myself out. All right, so Hasbro is next. So we'll zoom out here to our monthly on Hasbro. So yeah, Hasbro going back to 1972, the day of the dinosaurs. Since then, gone pretty parabolic, pretty bullish. It has seen its share of retraces to the 200s or close to the 200s along the way. But now we have actually broken down below the 200s, and we haven't done that a ton of times. We did it back here in 2000. Obviously, that was the big bubble burst. But most importantly, when we look at this thing, I mean, it looks beat down, and we don't see any signs of it stopping for now. And we have a pretty clear resistance up here, downtrend, high, lower high. And then we have on the downside, obviously, this crazy wick right here. But, you know, whatever we're doing right now, even if this rallies up here, we still have a lower low than that previous low. So however this looks, you know, whether we get a channel, whatever it decides it wants to do, the fact of the matter is we have a high and then a lower high. We have lows and then lower lows. So clearly in a downtrend. So that being said, on the monthly, I would just assume the downtrend's going to continue. What's worth paying attention to? We are at the 200s. We are at the bottom of this channel. There's only really 2 touches on the top, and this would potentially be the second one on the bottom. But I'm assuming other people would see this and probably try to buy this at least to rally back up to the heart line. Momentum to the downside. I mean, this thing has been in a pretty nasty retracement here for a while now. I mean, we had that bearish divergence we were talking about at the top right here, and it trying to break out, and that ended up being basically that bearish divergence throw over. And we had some targets, I thought. I can't remember. It's been a while here. So if we just fib back to the low from 2001 and just look at that one. Yeah, okay. So that's our 236 right here. And then we're breaking down from the 236. So, you know, as much as it looks like, hey, we could find some support here, more likely than not, actually, we're going down to the 382. Now, assuming this was just a lack of liquidity and we're not going to count that as our retracement, which you could go either way on this and say, well, we already hit the 382, so next target's a 0.5. I wouldn't argue against that, honestly. So I think this one actually, because of this crazy, like, I mean, this is liquidity issue. At no point in time should we see, this should not happen in real markets. This is a like $8 billion company. There's zero excuse for a 41%, you know. I mean, I get it, sure. It's like the end of the world. Nobody's going to need toys anymore. Whatever. But, I mean, that's insane. That's insane. So that being said, you know, whether or not you want to count that, you know, we have our next 2 targets. Even if one is a little bit redundant. You know, the first one would be obviously the 382 right here. And then the second one being the 0.5 down here. Which would be, I mean, obviously if things get really nasty. You know, but we're talking about $45 or $32. So still a ways down from the 58 we're at right now. And that's after a hell of a beatdown from that high up here at like 125. So very important. We're losing the 200 exponential and simple right now. Last couple times that happened, we did get like a little double bottom right here. Pretty technical with some decent wicks on it. We never actually flipped the 200 exponential and simple both red at the same time. We flipped the 200 exponential red here once and a second time, and the 200 simple goes flat right here and we're underneath it. And it looks like this is about to go into a really nasty bear market, but actually it ends up being, you know, the bottom. So are we going to get something similar? I mean, we don't know. Obviously these things, you know, often act similar, but they're never the same. So, you know, we're very close to that happening. And obviously, if that does happen, that's basically like for the first time in history of Hasbro, you know, going back 50 years, entering into a monthly bearish, you know, monthly bear market. So that is notable if and when that does happen. But, you know, looks to me like we could find support somewhere around this level. I mean, this has been a pretty violent move down from the top of the channel to the potential bottom of the channel, about another 45%. So the real question is, you know, do we get a bounce back to the top of the channel, 53%? Or do we break down and hit the 382, something like 22%? So still a little too far off. Not a great trade setup right here. If you're running a trade setup right here, you got to keep it tight at the bottom of the channel. Target being the top of the channel. You know, first a retested 236 in the heart line, but target being the top of the channel. And you cannot put your stop loss down here, you know, at the 382. You have to basically say, if we lose the channel, I'll rebuy at the 382 for a shot. Or potentially, I mean, who knows? This thing could get real nasty. I don't know what's going to happen, but, let's say we did lose the bottom of the channel right here. A lot of stuff looks like it could get nasty too. Let's say we did lose that bottom of that channel. Sure, we hit the 382 first. We get a little bounce back up, rejection. We end up down here at the 0.5. That's once again lining up at 32. So things could get nasty, folks. And what is this really? It's just a retest of 1999 peak right here. So this would be, if and when we got this breakdown, that would be basically a retest of the all-time high from 1999. So the 2000 top. Crazy. I mean, crazy, crazy. All right, so on to Mattel. Switch over to the monthly here real quick. Let me jump back in the chat here. Yeah, we'll check that one out, Jayhoff, for sure. What's up, Toby? Good to see you. Merry Christmas, brother. Imagine you would be on the sidelines since November 21s. Toby also says, what stock, crypto, and commodity portfolio would you build up and at what levels? Thanks. That is a super, super important question. And it sounds like financial advice as well. Man, I mean, it depends. There's just so much that needs to qualify an answer. The truth is, I mean, I would diversify right now. This is the most uncertain time in history. I would definitely diversify. I would spend a lot of time looking for correlations between, inflation and markets. Like we talk about, obviously, all the time. But definitely diversify. I would be very careful of popular themes. Things like, decentralization and cryptos and, solving the money problem. I would be very careful of things like future and innovation and profitless tech. Popular themes that only come up every like 30 or so years, like uranium and nuclear and stuff like that. Very, very slow moving things that have been popular and moved a lot already, that have a good narrative going into the future. A lot of times those are already priced in. So anyway, Mattel, basically, I mean, 1960s again, had a nice little push up, got absolutely decimated, went on an epic bull run, and then has basically gone sideways since 98. So this thing peaked out. This is a beautiful example of what happens oftentimes with things. This thing peaked out in 98. It retested those highs here in 2013. Imagine holding this thing for 15 years. You finally get back to even, and then, eventually goes back down to a new low. So very, very important. Okay, we got a little something over here. Very, very important levels to watch on this are, basically this channel that we had. Now it's not really relevant anymore because we broke down from it technically, once you lose it. But as soon as you reclaim it like that, we have to look at, I'm going to take these off here for a minute. We have to look at this the same way we look at, basically a false breakout or a throw over or a failed breakout or a stop hunt, whatever you want to call it. It's like the same thing, but to the downside. We have this key support. We don't want to break down. We don't want to take out our previous lows. And then, of course, we break down. Everybody gets squeezed out. It looks like this thing's going to zero. And then, of course, it pots back up and reclaims it. So here we are back at the heart line, back at the 200s, basically retesting them after confirming a bear market. This looks like it's going to come back down and revisit the bottom of the range. And then we'll see, does it hold? After coming down, we have the high, we have a low, we have a lower high. Likely we come down, put in a lower low. And if we do lose, this channel, it's a big deal because this is going back to, we basically been trading inside this range, going all the way back to 95, something like that. So very, very important level for Mattel. And I mean, this was lucky that it held right here or, a godsend or whatever. But if we come down there again, maybe it doesn't happen like that. Now, I'm always a proponent of when you're trading inside a range, you likely find support and resistance and trade that range. So to me, this is a shorting opportunity at the heart line in the 200s. After confirming into a bear market, the bias should be to the downside. And then when we get down here, it should be a buying opportunity because that's a key support, that is held for a very, very long time. And the truth is, if and when this thing decides it's going to break down to the downside. Let's just say we know for sure it's going to happen eventually. If and when that happens, I mean, we don't need to sit back and get wrecked. I mean, your potential target would be a retest here or just continue trading in the range. So you're talking about 100% to 300% targets if you're buying the bottom of the range right here, as where, you can know pretty clearly if we break down, you might be out of it. And then if we get another fake out like this, we sure get right back in if we find support down there. But I mean, you're talking about pretty massive downside, just the measured move, 78%, if this thing does break to the downside. And if we take the swing from 88, as crazy as that sounds, and put it up here, we could see the 236 is a little lower than the heart line, but we see some interactions along the way. And then we see obviously the 382 slightly lower, which is where this actually took that stab down to. So really, maybe it was just trying that whole time to hit the 382 and just couldn't quite get there. Finally pushes up, pushes a little bit higher. And then here we finally get the touch of the 382, come back up, lower high, and then next target would be the 0.5 at like $4.79. God, that sounds brutal. We're at $16.93 right now. $5 is basically the target if we break down from here, if we just go down just one more fib. But we're at the 236 right now, so it's worth watching. We don't want to get overly bearish, but it looks to me like we're confirming the bear market, getting ready to retest the lows. And then we get down to those lows, then we can start looking for a little, a little move like this. And then maybe a little bounce back up here, something along those lines. But the truth is, what is it? It's just a series of lower highs and, potentially lower lows. Now, if this comes down here and doesn't take out that low, it's going to start looking okay. We push back up here, and then it still just puts in another lower high. And then we push down, break down, put in the lower low. I mean, that could extend this consolidation out literally for years. So, I mean, the fact that we've been trading inside this range since 1994 tells me that the probability that we break down from here is extremely low. Extremely low. Now, you might have been saying that right here, and then we finally break down, and everybody gets tricked. I mean, this squeezes everybody out because they think, oh, that's it, we're going down. And then what's the next thing that happens? From the wick, which let's not even count that. Let's just go from the 382. The pushback up here is 200%. So if you shorted this on the breakdown, you bet on the breakdown, you got completely screwed. Same thing on the breakout. We break out right here, and it completely fails. And then next thing you know, it went 200% in the wrong direction that way and 83% in the wrong direction this way. So if you're trading this thing, expecting a breakdown of this, 30-year, well, not 30, 27-year pattern or whatever we said, I think you're doing the wrong thing. Should be trading inside the range. Should be shorting the histogram right here, the heart line, down to support, and then you should be longing from support back up to, maybe even just the 236, but something along these lines, depending on how long it draws out for. That's what I think. But the truth is, sure, eventually this thing probably does break down. I mean, the bias should be to the downside. We're under the 200s. They flip bearish here. They're about to flip bearish again. Lower high, lower low. Clear rejection. How does this really play out long term? Honestly, we probably see something like, this is like an A, a B, a C, something like that. Or maybe we're looking at, it could be a 5-wave correction, something like this. And this is actually like, almost done. Could be something like that. This could be just the part of the A. I mean, there's so many different ways this could develop in time. And obviously we don't know what's going to happen. I mean, this looks pretty realistic. What is this going to be? Like, that looks like a 61.8% retrace, roughly. Yeah, I mean, look at that. So let me flip this one yellow right here. So from our high to our low right here, that wick, we bounce back up here, exactly hit the 618, exactly hit the 200 exponential and simple, and then we put in our next lower high before the leg down. And then maybe inside this C leg down, we get an A, a B, a C like that. And that translates as, an A right here, a B push back up, and then finally the C brings us down, and then the break, measure, move, and this thing ends up, I mean, it sounds crazy right now, but, at $3. But I mean, it sounds crazy now, but also, you know, losing this level right here is also retesting levels from like the early 90s. And again, didn't take a lot of time to get up there. So got to be real careful. A lot of these look absolutely terrible. Speaking of absolutely terrible. And keep in mind, I look at some of these, you know, over time, obviously, but I didn't like scope these out ahead of time. Oh man. All right. So this thing's in rough shape. So this is Funko on the monthly right here, 2017. So we're basically back at 2017 like IPO prices. So we had a nice move to the upside, nice move to the downside, all the way back up here, and tried so hard to break out. And then here we are back at the beginning of the race. Not good. Not good. So losing, obviously not being able to break out is a huge freaking deal. Because, you know, we tested it enough times that, you know, now people are like, okay, I give up. So I think when this failed, you know, right here, the second time double top capitulated and then bang our head on the same level again, double top, and then it fails again, people go, oh God, not this again. I'm not going to get stuck in the capitulation. And then that's exactly what happened. So is it technicals? Is it psychological? You know, whatever. Is it just like, I see what happened here and that's going to happen to here again. So no Funko. Sure. I mean, that's what it's all about, really. You know, bearish divergence, double top, breakdown, the measure move breakdown from, you know, what amounts to what should have been support right here or was support. All we do is just take our measure move and see, okay, well, what's the target of that? And I mean, we can just eyeball it and see you know, we're basically at that point right now. So broke down a little too much, hit some stops, came back. You know, realistically, what should we be doing? Should we fib down here from the macro low to our little double top right there? See what we got. I mean, that looks pretty juicy right there. You know, basically the 236 is this support. I'm going to just delete the one we drew in. So somebody else is doing fib stuff. You know, realistically, they may be even looking at it from the macro high to the macro low as an internal retracement. But regardless, I mean, so we have from the low right here to our, we'll pick the double top high right here. 236 was that support. We lose the support. We capitulate, measure, move, breakdown from support to the 382 and then down to a 0.5. The wick actually overshoots it down here and almost hits the 618. But we close a monthly back at the 0.5. And then again, we try to push all the way. We come all the way down to the 618, back to the 0.5, close it there, and then try to push up to the 382, get pretty heavy rejection. So now we have a massive downside candle, a rejection to the downside, a rejection to the upside. So I think probably we're going to have to consolidate for a little bit and then see who's going to win this fight. Obviously, the Bears won the fight right here, but now the Bulls and the Bears are both fighting for either higher prices or lower prices. Obviously, you know, the bearish divergence has played out. You could argue that's done now. So maybe this is support. Maybe we need to touch the 618, come back down to like $7.24. You know, it could go lower. Obviously, could go lower. I mean, we have a wick right here for an all-time high. So you could argue we're not putting in lower highs. We technically closed a higher high right here, but I mean, people are probably going to look at it both ways. Wicks and closes, different time frames. So the real question is, I mean, the 0.5 is holding for now. The real question is, do we get a push all the way to the 382 at 1218 or a push down to 618 at 711? 821 bear cross just took place. I mean, at least it didn't have an exact same reaction like this. I mean, here's the thing. When a company comes out like this and goes, you know, a little sell off and then goes parabolic like this and then can't break out, and then we see heavy selling coming in like this one is almost excusable. You could say, okay, that was all the people that bought on the way up. But who is this? Who is this candle right here? Who did this selling right here? This is not people that bought here. It's not people that bought here. This is people, in my opinion, I don't know specifically, but in my opinion, this is people that owned this stock prior to it going public. Because there's so much selling that came in right here. So the real threat is that, essentially insider selling. I mean, it's not like illegal, like it sounds so ominous, insider selling, but, just that's likely who would come in with another leg down here. So this could get nasty. Hopefully we don't see another one like this, but I mean, 618 should be the technical target, potentially the 382, but this thing looks brutal. And we don't have enough history to really look at the longer time frames and have a better, I mean, you could put in like a 50 moving average or a 100 moving average and see where it's at. But we don't have any reference or anything specifically, so got to be real careful with this one. The knife is really, really low. Here the knife was really low, and that was basically the bottom. So there's definitely some potential upside on this thing. But the downside just looks like, I don't think you have any decent trade set up anytime soon. Maybe if it comes down to a key support. But for now, it's basically a coin toss after a capitulation. I don't have an edge on that one. All right, so we'll take a quick look at crypto, and then I'm going to keep this stream relatively short as we hit the 41-minute mark. So that's it for Santa's competition. The old toy workshops all finished up there. So he should make it one more year. All right, so Bitcoin on the daily, nothing has happened. We're just consolidating. There's literally zero price action here. This was key support level. Now we're under it. It's acting as resistance. We're under the 8 and 21. We're under the 4-hour 200s. So right now, what's happening? The indicator oscillators are trending up while the price goes sideways. That's not a good sign to me. I think this looks really bad. Crypto looks terrible right now to me. We're below the 200 exponential and it's red. We're below the 200 simple. They're about to cross down. We're below the 8 and 21, consolidating at the lows. We have a little price action holding us up right here, but you guys know what it is. My next real target, like actual target to downside, is like 14K. And it doesn't look that far away from where we're at right now. A little over 10%. We're trying to pick up momentum here. It's trying to do something, but we need some actual movement in price, not just like, hey, look at all these green histograms while price goes lower. That's not winning. That's the opposite of winning. And we'll do the end of the year stuff here as well on Wednesday, but brutal. I mean, that's it. That's what's holding us up right now, in case anybody was curious. We have these two wicks right here as support. And we have this one candle right here, the old Crutchy McCrutcherson, holding up the entire crypto market. Last month we closed a new cycle low, and right now we're at a new cycle low. So we have 5 days and 23 hours to rally back above last month's low, or it's just another in a series of lower lows. A new cycle low for Bitcoin. Ethereum, a little better off the lows right here. I'm not going to go into the long term. Again, doing nothing right here. The real level for Ethereum is, does 1,092 hold? Total market cap, we've been looking at this, obviously, just continue to trend lower. This is very much not a good thing. It looks very similar to the Bitcoin chart. Honestly, you probably couldn't even tell them apart. So everything I said about Bitcoin, just be like, total market cap, and then just like splice it in. I think AI can do that for you. Bitcoin dominance on the weekly. This is everything. Looks very close to the 821 bull cross. We did have a couple false alarms here, but we usually get a little follow through. So we'll see what happens when and if we do. What if we take out the stable coins? Substantially better. We're well off the lows. We're building structure on the way up here. The 821 cross has already taken place. We talked about this move up here. I expect one more very similar candle to retest this ascending support line as resistance. What happens then will be key. Do we push through it and take out this high? Do we get rejected, come back here, potentially take out the low? Overall, right now, though, it looks like the momentum's to the upside. And it's saying basically like people are moving more of their crypto into Bitcoin, are moving more of their money value into crypto or into Bitcoin rather than like other random cryptos. And that's when we exclude the stable coins. So cheese, not looking great down here. Hit the 786, broke down from key support. It was hanging out in this ascending, or this really megaphone like broadening wedge. It was hanging out above the 200s trying to hold. When it broke down from those levels, got real risky. This is it. This is the last line in the sand, 786. After that, your big play is like, does it double bottom? Because if not, it's basically just doom. And obviously, when we zoom out and we look at this chart, sure, it was looking, decent. There was some life in this thing. But, when we really look at it, depending on how you draw it, even if you say we're in this descending channel right here, and then we break down from the channel, and then we get our move to the upside, what did we really do? We just put in a lower high, and now we're back down here trying to retest that channel somewhere around there, depending, without getting too nitpicky. We're trying to retest it to see if it holds. If it holds, there's potential. We go to new all-time highs. That's what you want to see. But you typically want to see it break out, hold, and then move. You don't want to see it consolidate forever, break back down this area, not hold, and then new lows. And the truth is, as long as we have, basically a macro high and a lower high, series of lower highs right here, and, obviously that's our low. That's a lower low as well. I look at this and I say, we're probably going down here to put in new all-time lows. I mean, again, it's not a great way to... something along those lines as well. Yeah, I mean, it's not like crystal clear. We could do something closer to that. But the truth is, when we look at this, it's clearly just lower highs and lower lows. So the next target is probably new all-time lows on this thing. Pretty brutal. Pretty brutal. I mean, I had a chance. I had all the chance in the world above the 200s to try to break out. Solana is literally, hanging out at that 1.236, hanging out at the lows. And, we know, obviously, this thing has just been melting down. Melting down. Next target would be the 1.382, $7.55. Straight brutality. Chainlink at the lows, same exact thing, very, very close to breaking down from some key levels. We have this descending channel. We have some key fibs. But the truth is, we should find some kind of support around like 450. But again, it's had all the time in the world for people to be buying the lows right here and breaking it out to the upside. And we're just not seeing that happening. If anything, we're seeing a slow meltdown, which means that there's just more sellers than buyers. And eventually the pace often picks up, and that's when we get a big capitulation or breakdown to the next support. Avalanche looking pretty rough here, just hanging out at new lows. Looks like it's getting ready for another leg down. Again, just short-term target would be like $10.26. Polkadot has broken down again. Just another leg back to the downside. Looks like it's ready to do a 100% retrace back to $3.70 roughly. Yeah, about 372. Looks very, very likely. Crypto looks very, very bad right now. Matic actually looking pretty good. It's holding on to this level. But let's keep in mind, this is one of the ones that looked a lot like cheese, like the old chili cheese dog. So, we are hanging out at the 200. We are hanging out at the potential to load back up for a move to the upside. But, we're hanging out at support. It looks more likely than not we're breaking down from here. And that's the reason I'm not in this trade right now. I was looking for us to print some like bullish divergence, and then push up here. And then instead, we print a tiny bit of bullish divergence. And then, nothing has happened. Now, maybe we're setting up for it. That's our low. We have a slightly lower low. It's on both our indicator oscillators. Bullish divergence. We're starting to pick up steam again. So maybe this is worth a shot, actually. You know what? I do still have part of my, I have the Bitcoin position I told you guys I opened the other day open. So maybe I'll put part of that position actually into Matic. It's a little more risky of a play, obviously, but the reward is exponentially higher. Because this actually, I mean, it definitely could break down. If tomorrow it just like broke down suddenly and was at 53 cents, I wouldn't be surprised at all. But also, that bullish divergence is just kind of hanging out. And it is really trying to build some momentum back to the upside. So maybe I will. That actually looks decent. I mean, I'm still overall bearish on this thing. It is back below the 200s. But it does look like it might want to pop up here. All right, so we talked about a couple of these other like trash cryptos. XRP didn't actually print any bullish divergence, unfortunately, but is at some pretty key support levels. So we talked about the potential for some moves up here on some of the trash. Cardano, ADA, looks very, very close to the 0.5. Likely gets there, 23 cents. It's like 10% down from where it's at right now. But when you've lost this much money, and you're just like staking your trash coins, you know that you're screwed. You're screwed. You made 10%, but you lost 90% of your principal. You just leave it. You just set it and forget it. You don't even want to speak the name Cardano again. You know, your wife asks about it. How's the ADA going, honey? You don't even respond. Just ignore her. It's not worth your marriage. BMB or husband. I don't know. I mean, it could go either way. I assume that there could be somebody out there that doesn't fall into the 99% demographics. BNB, last of the cryptos, and then we're going to look at that one request and call it for today. BNB, I mean, this is it. This has got crypto on its back right here, in my opinion. We're at the bottom of this ascending channel. I mean, this is all the marbles. I mean, if BNB collapses and we get another FTX scenario, it's a big freaking deal. And obviously, you guys know, if you've been watching for any amount of time, this is our air pocket. There's a gigantic air pocket with almost no support. This is basically this is a week, that's a week, and that's a week. This is a single monthly candle or 3 single weekly candles that took us up to this level. And if we break down and threaten those levels again, you know, it could be a very, very violent drop down here to like $40. So we're at support right now. Obviously, you know, potential for a 60% up move, 9% down move below the 236. But if this thing does go down, you know, I normally look at Bitcoin and use that as a gauge of the entire crypto market. I think right now everybody should be looking at the BNB chart, because if there's days when we see weakness in BNB and not necessarily the rest of the crypto market, we should be in particular looking for the potential next blow up. Maybe it doesn't happen, but it's worth paying attention to for everyone, in my opinion. Okay, so let's take a look. I'm going to jump back in the chat here real quick, and then we'll take a look at that request and call it a Christmas stream. So anybody out there that hasn't said hi yet in the comments, Merry Christmas and hello. Leave a comment, really helps out. And you know what? If you're listening to this live or anytime and you haven't subscribed yet, I know I don't even talk about it like it's a thing, but go ahead, just subscribe. I mean, it's like your gift to me for the end of the year. And you could potentially be the 1,000th subscriber. But if you already subscribed, you're shit out of luck. All the people that already subscribed, you're screwed. You have zero chance of winning the 1,000th subscriber prize, which is absolutely nothing. Zero acknowledgement even. But for new people that haven't subscribed yet, you could potentially be the winner. No one will ever know, including me. But I guess you could at least kind of know or think it was you. I don't know. What's up, Eli? Good to see you, brother. Merry Christmas. That thick ADA yield is looking pretty nice right now, okay? I don't know if you've ever made 10%, but juicy yields. Now, granted, you did get robbed 90% of your principal, but congratulations. Congratulations. You get 10% of the 90% that you lost. Or really, you get 10% of 10%. So really, what was the yield? It was 1%. It was 1%. You got 1% yield, and you lost 90% of your principal. So I'm an investor. All right, let's look at Cabot Corp, and then we'll get out of here. I was actually thinking I was like, oh man, are we even going to be able to do this thing? Spending time with family and whatnot. I mean, which is fun. Don't get me wrong. I love it. It's great talking to family, all that good stuff. But, you know, I'd like to at least, I don't feel obligated like I have to stream or anything, but I'd like to let you guys know and then stick to what I say. All right, so we've been looking at this, obviously, but we'll do a little update here. So the big breakdown took us down here in March 2020 to about $20 and then ran up pretty aggressively. And then we see basically like this double/triple top at about $80. So at about 4x off the lows, it's basically back at this key support from 2018, which was the previous highs before the capitulation move. So we're at a key support level now. That key support level also lines up with the 200s. And obviously we talked about shorting the high versus long. I don't remember when I guess maybe we put it in right here and then it broke down and then it came back up. I don't know. It's been a while, I think, since we looked at this. I really can't remember. I'm assuming by how it's positioned, though, we were talking about shorting it here. Which, you know, again, that would have tried to come up. And, you know, if I would have been trading this, let's say, I would have shorted it here. Stop loss if we break too far above, you know, like to leave a little extra leeway so we don't get squeezed out at the top. But essentially, I would have shorted it right here, down to the 200s, took part of the profits off the table right here. And then we broke down again, we would have moved our stop loss instead of from up here back down to like somewhere in this range. Probably if it broke back above the 200s. Because obviously if we lose the 200s, that's great. We'll keep going to the downside. But if we reclaim those levels, we don't lose all the profits that we just made on the way down. So then this would have stopped us out of the remainder of the trade right here. And then actually, we could have just entered the same exact trade again and then seen it play out. So the real question is, when we came down here, you know, we basically came down to a slightly higher low. So it looks okay right now, but it's so close. I would look at this more as basically just a trading range, like a sideways kind of channel, than looking at this as like an ascending support. Just because they're so, the closes, or the, I guess technically it would be a channel, right? Because it's a gaps down open. Yeah, I mean, realistically, it is basically a channel. And we just broke down from the heart line. I'm going to get rid of this. And then we're going to use a tool that TradingView made specifically for us. Not us on this live stream, but like, you know, as a collective whole, like us, the people. Okay, so there we have, broke down from the heart line, broke down from the 200s, confirmed into a bear market for the first time. This is important, okay? This is important. People don't notice this or pay attention to this, but this is like the slow, exhaustion that's taking place on this. We're continuing to move to the upside. We're continuing to go higher. But here we started to see weakness. Okay, in the 200 exponential flip, 200 simple crossed above, that tells us that we're seeing exhaustion in the trend. And then we go on to put in new highs, which is not that uncommon. But then we consolidate at those new highs, put in new highs again, and continue like, you know, here we go parabolic, then we kind of retest, consolidate, and then we start to move, but we can't really get that far away from the 200s. And then we start putting in lower highs. And then we start, you know, threatening the lows. So it seems to me, without price action on this chart, you know, basically this is a clear resistance we can't get above at 75 bucks. This is a clear support we, you know, that's been holding up okay at 63 bucks, and we know why, because of back here. So realistically now we're seeing for the first time, even though we saw all this weakness right here, and we went on to cross the 200 exponential back above the 200 simple, and we went on to make new all-time highs multiple times, or at least cycle highs. I'd have to double check. But after all that, when it's all said and done, what are we doing right here now? For the first time, the 200 simple is on top of the 200 exponential, which it did right here, but we went on to make new highs. Not that crazy. But now we have a negative slope. Now we have a negative slope on the 200 exponential. We have a negative slope on the 200 simple. We're confirming into a daily bear market on this for the first time. So that is a very, very notable change. It's doing something now suddenly that it hasn't done while it just consolidates, you know, in the same level it's been consolidating for, I mean, what, a year now, right? So that's worth paying attention to. So now that we are confirming bearish, what I would look out for, and it doesn't have to happen, obviously, but what I would look out for is a breakdown to support. I would expect it's going to hold again, you know, because that's what we do. We just trade support and resistance because it's easy. And then I would look for the bounce back up. And then that is our confirmation into a bear market, breakdown to support, our retest to a try to save the trend, a rejection at the 200 exponential, the 200 simple, and the heart line. And then we can kind of do, you know, a little something like that, and then potentially look for that real break. But the truth is, I mean, this thing looks like it really wants to come down to the 236. So that is what I would still, you know, obviously we talked about it potentially happening way back here. You know, you can tell by the timing and that short trade and all that. But the truth is, I would look for it to hit that 236 still. But likely goes back down, retests the bottom of the range, comes all the way back to where it's at now, and then we can start looking. So the truth is, you know, it's already way off the top, so there's not really a short position. If we buy right here, we're longing back into resistance, which is the last bullish trade we take, the retest of the 200 exponential and simple as it confirms. So that gives you an opportunity for a long and like a 12% move. But at that point in time, assuming it gets rejected here, assuming, and it may not even get a bounce, the real area is to the downside. So the truth is, once again, and this was this exact scenario we talked about before. I think we were talking about a long position, and the truth is, the real trade is the short position. Because once we get back down here and we get back up to a heartline in the 200s, we can run a fairly tight stop. You can run like a 4 or 5% stop and say, hey, if it gets back above these levels, it probably retests the highs, so we don't want to be short anymore, or hedged, whatever. If you own a position, don't want to sell it for tax reasons or because you're a hodler, but you want to hedge that. I mean, there's your position right there. Obviously it's only 2-to-1 to the bottom of the channel, which is technically okay because it is a bear trend, based on 200 exponential and simple. But the real target is a 236. So sure, I mean, grab a little profit right here, lock in, half the position, 30 your position, whatever. If it's me anyway, obviously I'm not telling you what to do because I would never do that because you'll be living in a van down by the river. And nobody wants to live in a van down by the river, especially not on Christmas. But that's 16% to the, to the 236. So that's really what we're looking for. That's the trade. But always, want to take those quick profits. So yeah, I think that's the way to go. All right, so that's it for Cabot. And I think that's going to be it for our Christmas stream. That thick 88 yield. Merry Christmas, Eli. What is that? Kezzolino? Merry Christmas, my dude. Merry Christmas to you. Hopefully everybody had a great time with their family. Ate some good food. Hung out. Didn't wring each other's necks over politics or anything like that. Or, less than ideal investment opportunities. I can only imagine what some people like. Imagine if you were one of the people, no offense, that ropes your family into crypto or profitless tech. You selling your family last year on the ARK fund or whatever. Oh my God, I can only imagine. Happy holidays, man. Pleasure to be here. Yeah, for sure, Eli. I'm glad to have you, man. We definitely have an awesome community. It might be a little small sometimes, especially in the bear markets, but, it's full of nice characters, lots of diversity, people all over the world. I mean, it's awesome hearing people's perspective. And, I feel like we always have the best group members for, when there's shit going down. It's oh, my God, what's going on over here? And it's oh, we got a guy for that. We definitely luck out in that sense. But yeah, we'll go ahead and wrap it up there. I don't want to take up too much Christmas time. So Merry Christmas to everybody. If you don't celebrate Christmas, happy holidays. Hopefully everybody had a good year, some nice time with their family, good food, enjoyed themselves. And, if you didn't have a good year, obviously time to do things differently. So maybe time to focus a little more, spend some more time learning or educating or, growing as a person and make sure that 2023 is a better year than 2022. But obviously, I'm very grateful for each and every one of you guys, very thankful, and really have enjoyed our time together, especially over this past year, dealing with these markets, and definitely looking forward to many more of those. But let's start small with 2023. So Happy New Year to everybody. Merry Christmas, happy holidays, and we'll go ahead and wrap it up there. It is 9 p.m. Eastern Standard Time on 12/25/2022. And as always, remember, please, first and foremost, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. That's it for today. Love each and every one of you. Everybody stay safe out there. Stay warm. And we'll see you on our Wednesday evening stream. Crypto Trend Trader, and I'm out of here. One more Merry Christmas.